keep getting asked about is flood. Flood is very hard to do from a parametric point of view, but it's not impossible. You just got to think about, what type of a flood is affecting your location. Is it a rainfall-based flood? Is it from a river rising? Is it from snow melt? And then picking up a storm surge, picking up those things and then coming up with what is the data available to then come up with a parametric to cover that risk. So here's an example. I was looking at some data from Townsville. Townsville had some floods in Australia early in 2019. And then getting all the data from the weather provider there, you could sort of see if you group all the data together and put together an accumulative rainfall trigger, there was a clear trigger that sort of occurred every time there was a major flood from 1953, 1998, and 2019. So this looks like the trigger is a well-picked trigger. If we picked a trigger of say 600 millimeters, then you're picking up events where there was no actual flood or impact to your business, but you're going to pay more because it's actually, you can see from the trigger, it would make the payout a lot more. The policy would pay out more frequently, so therefore it becomes a more expensive parametric to pay out. But another thing you need to think about is flood is, you might have been affected by historical flood, but due to urbanization and changing floodplains, you may not be affected by that flood now, or you may be affected from a different event. This is where flood becomes just a tricky one to do a parametric on to minimize the basis risk. There's other things we could look at. This is a tidal station, so looking at storm surge and sea surge. If there's a data point that's reported and it's done from an independent source, then we can design a parametric around it. That's the point we get around.